Good day, everyone, and happy hump day. Well, it's nearly over, really, for a lot of us, certainly for me. I'm entering the last half hour of hump day and looking very much forward to what's on the other side of it at the moment. There's not a lot going on in terms of joy in the markets for me at the moment. Well, there's a couple of things going on, but not a whole lot that I can probably bank on at the moment, which is just the way she rolls at times. Let's see if we can find. G'day, John. How you doing, buddy? Let's see if we can find something to warm the cockles of our heart, shall we? I think I'll start with the Forex factory, which is as boring as it possibly gets because there's not too much going on there either. Let me find my control panel. There it is. Okay, this is the reason why I say what I say. And it's all because, well, nothing, really nothing. Wednesday the 7th is what we're looking at. And as we know, the Chinese, what's it called? National Day has been happening for the last 3 days. So Monday, Tuesday, Wednesday, we have had a holiday in China, a bank holiday in China. We've had the Bank of Japan's Governor Kuroda speaking today. I'm not too sure if it's what he said, but maybe it is. But certainly we've seen the yen do some interesting things today. Are we risk on? Are we risk off? All those sorts of questions yet to be answered, I suppose, today. We seem to be in Mr. Miyagi territory. Sorry, I haven't switched my camera on, have I? Let me do that so that you can actually see that I'm a real person. Here I am. Hi. Let's swing that over there. And again, let's have a look at what's going on today in the world, wonderful world of news events. Really, only, well, two events. We have already had Christine Lagarde, I think, for the third time this week, having a little chat. I'm not too sure who she was addressing today. The Paris Europlace Online International Financial Forum. Okay, jolly good for them. I'm not sure what narrative can be changed, frankly, from the ECB president, as they all are at the moment. They're just speaking the same language, which is we'll do whatever it takes to get us through coronavirus and get us back to inflation of circa 2%. That's pretty much all I hear. And really, what else can they say? What else can they do is the biggest question, I guess. And I did notice in her latest, or the latest thing I read on Mrs. Lagarde, that she was very grateful that the central, or her central bank, the European Central Bank, was in fact being helped by the governments. And I think that's pretty much commonplace as well. All of the central bankers, of course, their responsibility hasn't changed, but they are getting assistance from their respective governments in fiscal policy, which, of course, has had to come to the fore given COVID-19 and all of those problems that brings to a country's economy. Um, Question from John: is there just less liquidity in the market? Just an idea. It feels like everyone is on the side watching. John, good question. And I think you'll find that we tend to get that when we are in between news events, pretty much. Not a lot happening in terms of the general market. We've had a few minor announcements this week on the majors, that being the RBA statement, of course, on the Aussie. We've had non-services PMI and services PMI, I think, out of the States. And really, we've had central bankers talking apart from that. So really the news is not out there. Well, the numbers aren't out. There's no data being released this week. What we have seen, of course, is this morning, or certainly early this morning, my time, Trump tweeting. And I won't go into why or what or and it's all about flexing his muscle, of course. I won't go into why or what it was all about, because I'm not a fundamentalist. I'm not an economist, and I don't understand many things that the market does as a result of fundamental announcements, movements, and people talking, and how it all gets hashed up, if you like, and why the market actually reacts the way it does sometimes. Often there's a knee-jerk reaction that is counteracted by common sense when it comes into play. Those sorts of things that happen. No, I'm not a politician, that's for sure. Never want to be one, just not in my head, Peel, that's for sure. But it really is an interesting question, and I'll give you a little indicator as to what you may, how you may judge that, and how you can recognize that you're in that situation. Of course, there are volatility indexes and all those sorts of things that are readily available all over the place, but there's a simpler way to do it, and I'll show you that in just a tick. Pound Kiwi has no buyers or sellers really for yesterday and today. We'll have a look at that as well as I go around the grounds. But anyway, let's get off the fundamental side of things, because really there's not that much happening apart from the FOMC meeting minutes, which will come out when I'm well and truly in bed, tucked up and snoring, potentially. Probably more than potentially, I've got to say. So let's switch back to the chart, shall we? And again, and John, the same thing applies. I'm not that. Oh, what did I just share? That one, I hope. I'm not that fussed on a lot of things at the moment. One thing I am into, though, is Kiwi yen. And again, those of you who were in this session yesterday, I do apologize for not noticing this trade. It was quite standout, frankly, when I had a look at it over my glass of port after I closed the US session last night. And I did notice that, and I'll go back to another one. I can't remember what the pair was, but it might have been Kiwi US dollar, actually. And we did notice that we had a false break of, might have been the Aussie, a false break of the monthly pivot. I think I did point that one out to you guys. This wasn't dissimilar to that, but it was better than that, because we also had a trend line or a trade line coming through here that had been broken. We had a bit of consolidation above it, then we got straight back underneath it, closing underneath the daily pivot as well. And then, of course, we got that buyer bar, which retested everything: daily pivot, trend line or trade line, and monthly pivot, almost a high as well. So that was your entry point. And I did take advantage of that. And one good thing that Donald Trump did yesterday was force the yen up. So the market went risk off for whatever brief period of time, and then kind of changed its mind again. That's what I mean, Mr. Miyagi. It's wax on, wax off. And we're finding, or I was finding that very much the case when I woke up this morning. So I got into this, got a TP1, obviously, just before the weekly pivot. And that's really as good as it has got till now. Maybe, just maybe, we can kick off this level again, maybe. I don't know. Is Donald ready to tweet again? He's probably still in bed. No, he'd be up by now. I've moved my stops to here, because I think if the momentum shift, which we seem to have had, does continue, then we're going to be back up here, I think, without too much doubt at all. So it's a little bit tricky. Again, it's the risk on, risk off scenario, and Kiwi yen will very much be a part of that. So if you're in this trade and did pick this one up and you noticed it, then that's what I've done. I've moved my stops just to here, which of course will lock in the second amount of profit that I've taken. What else is going on? Let's take a look at Euro Pound. And again, I just shake my head, really. It's almost to the point of distraction that we just cannot get a follow through on this or any pair at the moment. Yeah, we're getting our TP1s quite readily, no issues there. Some of them we're even getting TP2s, but as soon as that happens, kerboom, back to where we came from. And it is very, very frustrating. And that, I think, goes back to your question, John, with the liquidity situation. I think that the market hasn't just got the energy or the momentum to go where you consider that it might logically go. And for that reason, we tend to be going to and fro, to and fro, to and fro. That's not necessarily a bad thing for us, of course, because we do have a system that allows us to trade ranges. And that's kind of what I want to talk about a little bit later on in when we get into the US session proper. One thing I will point out at the moment is going back to that liquidity factor. It's pretty easy to get a handle on that. And let's use the most traded pair of all, which of course is the euro dollar. And I spent, wow, 6-7 years just trading the euro dollar. No other currency, no other trade, just euro dollar, and mainly on the 30-minute chart. So I had a very good understanding of how that moved, what time of day it moved, what you'd likely pick up at any given time, and what the ATR was, all of those sorts of things. I could tell you from day to day exactly what was likely to happen. And that was a lot of fun, to be fair, because, well, I'll say back in those days, because it is back in those days, we were very much a different ball game because we didn't have supercomputers. We certainly didn't have Donald Trump. But there's always some fundamental aspect to your trading. You can't deny that, and you can't trade without having some sort of knowledge of what's going on. But the point of the exercise is I got to know the euro dollar pretty well. And sometimes I think, that's not a bad idea just to go back and trade that. But you guys wouldn't be very, very interested in me doing that because I've been sitting here for a long, long time doing absolutely nothing, which is not an issue for me. I can handle that quite readily, but I don't know that you'd be terribly entertained by it. But what came out of all of that was the skill that I developed in recognizing what was overbought, what was oversold, what was the potential direction of the pair for that day, that hour, and all sorts of things like that. And you'll notice when I have my charts, my analysis chart, really the only thing that you see on them may be shapes like this, the rectangle, the trend lines or trade lines certainly, and the pivots. The pivots, of course, are what tell me just about everything I need to know about a chart. And today, let me take that from scratch very, very shortly. But before we get into that, I'll just quickly go around the grounds and see if we have got anything to trade. I'll just concentrate on what my watch list was from day one, which of course is Sunday when I do my analysis these days. I never used to do my analysis on a Sunday. It was pretty much, okay, it's Tuesday, time to trade. Let's get in front of the charts about an hour before the show in most days, because we've been doing these shows for goodness knows how many years, probably 10 years plus, and always around about UK Open. So what I do is the same thing every day. So it's pretty easy for me. But let's go quickly through this watch list, shall we? CAD Swiss, we were looking early in the piece to go long, CAD Swiss this week, but pretty much based on what we saw the week before, which was this bar here, followed by a little bit of a pullback to the pivots, and then this bar here, which broke our range substantially. And we were keen to get a pullback so that we could trade it long. Pullback we got, but gee, it was a strong one. It came right back to where it started. And then, of course, with the very next bar on the very next day, which I think was Thursday, maybe even Friday, 1, 2, 3, Thursday it was. and we came straight back to the top of that range. Since then, we've just meandered, if you like, very, very slowly down along the weekly pivot and not gone too much further. Have we reached the bottom of the range is the question that I ask myself, and therefore, do I have a directional bias? If it had reached the bottom, then my directional bias, of course, is going to be long. The issue that I've got right now and have had most of the week is an issue of the pivots and how they're positioned, which of course is part of what I'm going to show you guys in a little bit. We are in between the daily pivot and the weekly pivot, as is obvious from this chart. Have we come off the bottom is the second question. But this is a real issue for me, because if you were to enter the market here, you're going to trade straight into the weekly pivot. If you were trying to trade long, if you were waiting for a better entry, then you're probably wanting something below the daily pivot, or to close below the daily pivot, to give you that insurance bar. And that's just not happening. So at the moment, I've just got question mark, what happens next? And I can't answer that right now until the candle shows me something. So I just give that a miss. But the pivots are showing me that there's a whole lot of question mark around whether we're going anywhere, because price is quite happy to sit in between the daily pivot and the weekly pivot once they are in that formation. So it's a no for me right now on this particular cross, which of course is CAD Swiss. Aussie CAD. Now, Aussie CAD, we were trying to trade short as of Sunday based on these candles from the week before last, not last week even. That one, and that one, which of course are three black crows, and broke once again the bottom of this range fairly substantially. A very decisive break. And for that reason, I was looking for a pullback to trade short. Did we get the pullback? Sure, we got the pullback. And now we put in that little double pump off that level there, which is a good horizontal level. And we were looking to get into this somehow, but then the quick move takes away the opportunity for us to trade. Now we're looking at perhaps a retest of the daily pivot, a retest of the weekly pivot, and we've got to get rid of this trade line because it's now been violated too many times. We've got to put it down to here. So that's not going to be a thing. There'll be no confluence with the trade line, but there is a horizontal level running through there as well, which is kind of iffy, but I'm going to call it there, where it's been resistance, been support, resistance, support through here, and support, and then it smashed through. So I think a retest here of that level on the current bar, which is today's bar, may be interesting for us tomorrow, but at the moment, it's not that interesting. That little bar there is a little bit, okay, do I want to trade a bar that small? Great reward to risk, no question. But I also see the weekly pivot above us, and I also see this trend line and monthly pivot confluence area. So I'm just not ready to go short yet, is the answer to that. So I'll leave that one alone. Kiwi CAD. Kiwi CAD was also a short bias, and this was based pretty much on what? I can't remember. Oh, okay, yeah, all right. It was pretty much the confluence area of monthly pivot, trend line, and I was looking for a bounce in that area. So break the pivots back here, which is exactly what happened. And then it's gone short. Why didn't we find a way into that is the question. Well, primarily, I think it was we were not in front of the charts at the right time, or we didn't get a setup. And of course, we've now got a situation where that has broken to the short side. And I don't know if we're coming back here. So I've probably got to give that one a miss as well, because I just wasn't in front of the charts at the right time or didn't find an entry. So that's kind of been the week, I think, so far. Pound Kiwi is another one that we're looking to trade, and we're looking to trade that long. Now, as I shook my head last night when we got into this situation, where we saw precisely what I've just described on, what was the other one? can't remember now, but there's a few of them. Kiwi yen was one, where we had this break of the trade line, break of the monthly pivot, weekly pivot, and daily pivot in this case, then back underneath and then retested it. That's a classic short setup for me, and I'm wanting to trade it long. Now, of course, this happened very late last night, and I thought, oh, wow, do I really want to trade that? And I think that's when I started looking at Kiwi yen just after the show closed. And I found that that was a far better conveyance than was this £1 Kiwi. I'm still waiting, and my bias is still long on this. I'm not sure how I'm going to find a way in, though. The only way I can see at the moment is if price came back below these levels, below the pivots, below the trade line, then got back above them and retested them. That's the only way I can see to get long at the moment. Unless, of course, you're trading levels, and I don't trade levels normally. I just trade setups. So at the moment, that's also a no. Then, of course, yesterday we were looking at Aussie Kiwi. Now, Aussie Kiwi is still top of my watch list. And here's the reason why. Probably the weekly chart. No, the daily chart shows the best. Hang on 2 secs, guys. I haven't got any chat up to see if you guys are talking to me. And I'm sure you would be. So let me just bring that up before I go too much further. Ready, set, go. All right. And hello to those who've said hello. Hi, SF. How you doing? Great. All right. I don't have anything there to take notice of. So here's the thing with Aussie Kiwi. I see a big double top sitting there. I see a series of lower lows and lower highs, which have started this channel, this descending channel. And the last time we visited the extremes of this channel was here, which also started to form rectangle. So we've got a couple of things going on here. In fact, we've got 3 things going on here. We've got the rectangle, which we are going top to bottom to top to bottom. Looks like we're having another visit of the top, but certainly of the monthly pivot. And here's where we've got to start paying attention, right? When we have a confluence like this at the top of or bottom of, doesn't matter where it is, as long as it's at an extreme of one of our ranges, it's now time to pay attention, because exactly what we're waiting for may be about to happen. And that, of course, would be one of 2 things. One, we go to the top and then look for a lower high. 2, we come back underneath the trade line, which of course is the top of the channel, and then retest it, which of course would be a short again. And don't forget, our target area is down here somewhere, because we're looking for bottom to top, top to bottom, bottom to top, top to bottom, down here somewhere. So the reward, the potential reward on this is quite substantial. And you know, we're kind of 1/3 of the way into this particular scenario. All we need to see here is price bounce off the monthly pivot or the top of the range, then come back underneath this trend line, which is the top of the channel, and then retest it. We don't need any more information than that. That tells us that we're ready to go short. And that's exactly what we'll be doing off Aussie Kiwi. So that's very, very much still on top of our watch list. Euro CAD, those of you who've been in with Ash and I for however long we've been doing the show, really, but certainly in the last few months, I've been looking to trade Euro CAD short. And for some reason, I can't find that chart. It's got to be here somewhere. Or did I lose it when I was looking for the S&P? I might have. Anyway, it's easy to bring up. We'll just bring up a new one. Euro CAD is something that's been very much elusive. And I think, I've lost count, but I think we've actually traded it 7 times and looking for the 8th at the moment. I'm very committed to this, you might say. And there's a good reason for it. So let me show you that reason. Those of you who haven't been in the show will recognize that we are at a very strong resistance level, which is a cloud of a price, of course. It could be there, it could be there, but it's certainly, as my good friend Orlando would call it, a key level, this area here where we are. So when we've got such a thing, we're looking to go off that level and maybe come down to wherever the bottom of a range is. Let's not say this range is in here, but of course it is if you want it to be. But really what we've got here is a big double top. And that big double top couldn't be any more obvious to me. And, you know, the tighter you go, the more it becomes obvious. And then, of course, once we get that, we're looking for a reversal to take place. That reversal can come as a neckline break, which will be way down here, or it could come as a lower high. And, you know, really, we've got that lower high sitting there on the weekly chart. And I did point this out to the shows for all to see. Look, you could still take that position. In fact, let's do that. Let's place that trade, because I've been talking about it so long and I just haven't placed it. Let's do it. We're just going to trade this bar, guys, this one here. And the level will be, we'll just need to trade underneath it, 154.48. There you go. It's a sell stop. 154.48. Is that what I said? Yeah. I better check it. 55.48. Sorry, didn't look right. 155.48. I'll explain to you why in a tick. Stop loss has to be above that candle. And 157.40. Let's go 157.48 and keep it in nice round figures, eh? 157.48. Okay, so what we're doing is we're tying up a bit of capital here. Not much, but we're tying up a little bit of capital for a while until this pans out. But our risk here is what? 200 odd pips. But look at the potential reward if we do go down to the bottom here. It is about 6 to 1. So that kind of interests me. And I expect that to happen. It's not like I'm going, all right, let's imagine that there's a hurricane comes along and it blows price from here to here. It's not like that. When I trade, I do very, very logistical things, if you like, or sequential things. And to me, there's always the hint of symmetry in the market. And certainly if you're talking about cycles, for instance, cycles are there all the time. Every single hour, every single minute of the day, there's a cycle taking place, or we're in part of a cycle, right? Look, cycles are a whole science. And I know a guy who's done 2 degrees in cycles, and he spent 10 years of his life studying cycles. In fact, he came to me about, 8 years ago, when he'd been trading the stock market using cycles, and he decided that he wanted to get into currencies. So he was living not far from me, and I was working for another education company at the time. And he came to me, not to me personally, but to the company, and I was privy to the conversation. And he spun his story, and he charted out, he mapped it out on paper exactly what he was trying to achieve. And he pointed out that this cycle began here and it went there and it ended there because of X, Y, Z. And it all made perfect sense to me because it was logistical, it was mathematical, it was based on probability, based on a cycle. And I thought that this was a really good thing, but the boss of the company I was working with said, no, don't want to know about it. So anyway, I didn't think another thing about him until maybe 2 or 3 years ago, actually. And I gave him, I always kept his details, and I gave him a call, and I said, how did you go converting your system into currencies? And he said, still haven't done it. And he promised to come down and see me. I still haven't seen him, but I'm really, really keen to take advantage of his knowledge and combine to see if we can actually get this cycle thing happening. Anyway, I digress, and I digress substantially, for which I do sincerely apologize. But what I'm looking for here is, once I see one thing happen on the left-hand side, I draw, and similar things start to happen on the right-hand side, I immediately draw the line of symmetry, which of course in this case goes straight through the bottom of the swing here, which created the double top. So what I'm really looking for, and have been looking for since I saw this double top, is, yes, a lower high, which we now have on the weekly chart. And that's why we're trading this now, right? Because what I expect to happen is what happened on this side. So we've come straight from here to here. I expect it to happen on this side, coming straight from here back down to here, because that's what charts do. You know, as much as you want to think that something's new in charting and new in trading and new in the value of a currency versus another currency, it's not new at all. It's all happened before. And, you know, these highs and these peaks that we see are there for a reason, because the market doesn't want to see this go any higher than that. The fair value system comes into play and says, well, no, hang on a minute. The euro versus the CAD really isn't worth any more than $1.6. And when we reach that point, no, you can all go to buggery. I don't care how many of you want to buy. We're going this way. And we're going this way till we come to here, because the fair value is somewhere between this level and that level. That's how it's always been. That's how it always will be. Well, as far as I know, it always will be. But certainly you've got to trade it as though it is like that. You can't expect to go through, in currency pairs in particular. Certainly the stock market can and does, and always makes new highs. There's no question about that. But currency markets, no, completely different. You always got this reversion to the mean system going on. And that, again, is part of, my goodness me, I've gone over time. I'll continue on, though, just for a little bit. And I don't want to keep Maya awake, but she'll close me down in a second. I'll just finish this little explanation. So what I see on this side, I expect to happen on this side at the end of the day. So that would then complete that cycle. I was talking about cycles, right? Pump and dump, Shukri, exactly same thing. But cryptos haven't got the history yet. These things have got the history. These currency pairs are always looking to go back to the mean. So my shock and horror, not really, is, and this is why we've been in this 7 or 8 times, right? Because I expect this to go down to here. And I don't want to wake up on Christmas Day and see prices down here at 142. And I didn't take this position. That would make me look like a goose, because I'm here to see that, and I'm here to trade that if I possibly can. So, okay, we've got this position on. Is that what I really want to do? No. I want to get in with a risk that's about 40 pips and still get that 1,200 pips that's available. So I'll continue to look at the smaller timeframes, daily, 4 hour in particular, because they're pretty much the easiest, in quotation marks, to see. Why? Because they only happen every 4 hours or every day. So I don't have to be in front of the charts 10 hours a day to actually find these trades. That's why they're the easiest. No other reason. So I'm looking for a break here, back underneath retest. You've heard me say this many, many times. And then I'll look to trade it short. So until I wake up on Christmas Day and we are down at the 140s, I'll continue to do that until this double top no longer exists. And of course, that's entirely possible, and this cycle won't complete. There are such things. Currencies version of the mean, crypto is pump and dump. Yes, so long the history. Carver on Christmas. Bulla, bulla, bulla. Absolutely. Righto, guys. Look, I'm going to continue this in the US session because I don't see too many trades on option at the moment, but I have got a few things that I want to show you guys that are relevant to John, your first question, which was more than half an hour ago, and I haven't answered it yet. When we get into low volatility and what that actually means and how we can actually deal with it. So, guys, those of you in the YouTube and the social media, thank you very much for your company. It's time to go to the subscription version of the show, and we will be back with Ash tomorrow, and we will see you then. Of course, we'll be back in the UK session as well. So have a wonderful rest of Hump Day, those of you who are checking out, and we will see you very, very shortly, the ones who are subscribers. So I'll be just absent for a minute or so, and we'll be back with you very, very shortly.